G'day, John. So we're back for another chat on the 7th of May, shortly after a election result over the weekend there with a new ALP government. So I guess just a bit of time for you and I to have a chat around the types of policies that have been promised, what the impact those might have, and how a Labor government's going to approach the economy, and what the repercussions might be for investors and just participants in that market. So thanks again for joining me for another chat.
Yeah, well, it's a strong mandate for the government. You can't deny that, and they had a swing, and they've dominate the lower house, which makes the House of Reps, a little bit subservient to the real game, which would be the Senate, where the Greens have the balance of power if Labor and Liberal don't agree. So we're in for an interesting period. I think the thing that jumps out to me, Michael, is the budget's deteriorated substantially. Whilst I don't believe it should be as bad as it is, it is because of all these promises, which I guess we'll talk about. And it was about $10 billion which Labor had up their sleeve in the budget, which they're probably overutilised in promises. So we've got a budget deficit looking like 1% of GDP. To rectify that, usually you start doing the hard decisions in the first year of a new parliament. And I think Labor, to some extent, without being too smart about it, I think they were surprised they got the mandate they got. They probably are surprised they won. 2 weeks ago, they would have been looking at a loss, if not a hung parliament. So they've promised the world, and as you say, they have to deliver now, and it's going to have some consequences on the budget and the economy.
It's a funny one, isn't it? Because I kind of feel like both sides of the major parties, neither thought they were going to actually have complete control, and ran headlong into a stack of promises on the basis that if there was a minority, they wouldn't really have to deliver on it. And now that Labor's got a mandate, it's going to have to do what it said. And it's interesting on the politics side of things. We'll get into the repercussions, but I sort of look at it and say, well, it's actually similar to what we had with the GST with Howard and the Democrats, where the Democrats had this sort of balance of power position, and they could only go so far before Labor would side with the Liberal Party, but there was a piece they could move in the middle, and it'll be, I think, the same where there'll be a point where the Greens will want to go so far, Labor will want to go so far, the Greens will want them to go further, and the Liberal Party would be in a position to just agree with Labor in order to cut off more extreme outcomes. So they've been talking about like a progressive Senate, but that will only go so far before the Liberal Party will just be to say, well, let's just move this through, rather than run the risk of seeing it become extreme. So it's going to be really interesting to see how that plays out. But it does remind me of, what happened to the GST with the Democrats, where they took this fairly simple streamlining of tax and then turned it into this, indescribable complexity of what was and wasn't GST applicable. And, it sunk one Labor minister who couldn't explain the cost of a cake, depending on where you bought it. So it'll be interesting to see how that plays out. But the other thing I found funny just on the results, and we'll get into the detail, is a lot of people have seen this as, the Greens didn't get any seats, therefore they didn't really get the turnout was expected. But when you look at the percentage of vote they actually collected, it's grown and growing. And in a lot of ways, they might not have a seat, but they very much were the reason the Labor Party got in, especially the seats they got. And I think the other thing that I found interesting, probably not so much on the more progressive vote, but the Conservative vote typically prefers a government over their government. So what I mean by that is I would say a lot of Liberal voters would go Liberal 1, many would actually go Labor 2, right? Versus a Greens voter would put Liberal last and a Labor voter would put Liberal last. So when you see the flow of preferences, I actually think there's quite a few Liberal voters that would have said, I'd like a Liberal Party government, but if I can't get that, I'd prefer that than a minority government of chaos, which is what we've seen in Europe and other places around the world where governments can't actually make decisive, outputs. Like either one of the major parties have to live and die by the decisions they make, whereas all the minorities can just, throw whatever, pull whatever, and there's no consequence for them. So,
look, I'm sort of kicking myself because I remember saying a few months ago that the election this time is going to be driven by nearly 1 million new entrants to the voting ranks, either from people turning 18, this is in the last 6 years, or immigrants. And at the other end, you've got the exits, people dying. And there is a demographic shift going through the votes. And I think Labor to their credit, picked up on that more than the Liberals. The Liberals are still going after the grey hair, and probably that's not the way to win an election. Probably the way to win an election is look after that 20 to 40-year-old conduit, young families, people aspiring to get ahead, and looking after them. And I just wonder, when the dust settles, there's going to be a lot of investigation of what's happened here, but I suspect that's what's going to come out of this, that Labor's policies, and to an extent Greens, were more attractive to those people. And really the well-off we manage superannuation for self-directed retirees. Yes, there's 1 million superannuation accounts, but they're not really growing dramatically, whereas there's more people entering the workforce than leaving it, so to speak. So
it is an interesting one, because I think when you actually look through the policy detail, the Liberal Party did put forward quite a lot of policy focused on young people, but their ability to get cut through on any of those was near zero. You know, like immediate changes around the fuel excise and all these other things were all designed to be short, quick wins without long-term budget impact that would just provide immediate result. But their ability to communicate that and to connect with that area of that demographic is probably where they fell. Because I think I'm a big fan of, you know, reading as widely as I can, right? So even reading Reddit and, you know, alternative news sources and all sorts of stuff to just see what other people are thinking. And there's no doubt that for whatever reason, young Australia thinks the Liberal Party is not just an alternative opposition, but evil, right? That they're actually out to get them. And until they fix that, it won't matter what their policy positions are. People won't read them. There's just a barrier before they get there. But, you know, I'm sure other commentators are going to do a better job than us on that. So maybe let's get to the policy. Obviously, in our side, this unrealised capital gain proposal into super it's a funny one. I think for us in industry, it's an obsession around the damage that they can cause. But I think for the general public, it becomes a, why do I care? It's $3 million super. My super's 200 grand. There's not a connection between the impact and the people affected by it. What's your view on this approach to tax unrealised gains?
Well, it's it's a hard one, because it looks like a reasonable benefit limit of $3 million being put in place, but it's not actually. What they're actually saying is, we just want to tax you over $3 million. And we're going to create this obscene tax on unrealised capital gains. You know, the alternative would be to bring back reasonable benefit limits and saying that's how much you can have in super per member. You get the tax breaks up to that limit. That's more than enough to retire. So off you go, and any excess you can put into different investment vehicles and take your chances. So my question is, why are they doing this? I think the first issue is the unrealised tax is a bubble, is a brain bubble coming out of Treasury. I'd like to know where it came from. I'd like to know who's responsible, because I think it's an appalling change in the taxation system and can lead to serious consequences, which we'll talk about. The extension of an unrealised tax from super into other asset classes would be terrible. And the precedent being set is awful. So we've got a lot of issues around it, not only thinking about our future, Michael, but obviously our clients and the broader society. And as you say, people aren't addressing it because they think it won't affect me. That attitude is very dangerous when people say it won't affect me. Well, it might not affect you in super, and I think 80%, 90% of people won't be affected in their lifetime. That's more a statement about how poor super is as a retirement policy, but how we've structured it, more than anything. But if people understand retirement policy, there are 3 planks to it, and 2 of the main planks are account-based super, where people contribute to their own account, and owning your own house. Now, if we're going to say that super over 3 million attracts an unrealised tax, then at what point does a future government say, well, if that's gone through and we haven't had objection, let's start putting it on to housing, which is the second plank? And they could say, well, people don't need to live in $10 million houses or $20 million houses or $30 million houses. That's a more potent argument than saying you don't need $3 million in super, when you think about it. And when you can make, at that end of the market, capital gains of millions of dollars tax-free, while the average person, the average worker, is going to work and paying tax every day of the week, there's a real disconnect between what Labor is proposing and what they probably could have proposed or what they should have proposed in a total rethink about taxation policy. And I guess that leaves it open to the
It's a quite
opposition
better
to
idea.
come in here and have some sort
Because
of
I
policy.
think
Yeah.
there's a couple of things I think on this. One is there's a disconnect between what government thinks they will get out of policy and what they actually get. So I remember, like I was working in one of the institutions when the Div 293 tax came in, right? So for those that don't know, that's a tax if you're earning more than was originally 300, now it's 250,000, you pay an additional contributions tax. Now, when they brought that out, they were convinced that they were going to get $250 million a year in new tax from that, the introduction of the Div 293 tax. And that over 4 years, it would be $1 billion. Now, I did just some numbers because unfortunately the ATO doesn't actually publish what they actually get out of it. But there's 17,830 people that are earning more than $250,000 as employees, right, in Australia. And if every single one of them just blindly made these additional contributions, the government would get approximately $73 million worth of revenue out of it. But and that's assuming that everyone sleepwalks into that tax, right? But the reality is that people don't. They just look for opportunities to change things. So to me, it's not so much the slippery slope of saying, well, if they're unrealised tax here, then they could do it on other assets. It's the flow-on effect that I think this unintended consequence that's really poorly understood. And a quick example I've got is there's a state in Australia, it's a southern state, let's call it South Australia, that introduced a rule that basically said that a very large car park that was owned by a large shopping centre had to allow people to park for the hospital next door, right? They basically went, you're currently charging for car parking, you're not allowed to charge these people, right? That's a nice sounding policy. The problem, the flow-on effect with that was the guys I know that do very large-scale commercial investments with respect to shopping centres said the two main shopping centre brands in Australia are not going to open any new stores in that state until something like that's resolved. So the flow-on of capital investment into the state from something as small as telling a landowner what to do with their property can be unforeseen and much larger. So I look at this unrealised capital gain and say, righto, not many people have a balance above $3 million, yet someone's going to have to sell an asset they don't want to sell in order to pay this tax, which in itself is stupid. Right? Sell an asset you haven't sold yet to pay a tax you shouldn't have to pay yet. But the unintended consequence of this is anyone who does farm planning, where they own a large agricultural lot and they put certain lots inside their super fund to protect themselves, because the only real protection from bankruptcy is assets in your super. It's the safest place for you to have it. Now, if their land asset appreciates and it's farmland, which generates almost no income as a percentage, right? They could find themselves with a tax on an unrealised gain for a farm asset that they're owning to hand over to generations over time with no intention to sell, and a tax bill they can't pay because their SMSF has almost no other assets. So I think this unintended consequences where you sort of go, oh, we're only going to tax these very wealthy people who've put too much in their super. No, you're actually going to force farm owners who are middle scale to sell assets that they can't afford to sell because they've accidentally in the past decided to put an asset in their SMSF. The other one I see with this is venture capital. So venture capital as it is hard enough in Australia. Like typically most venture capital investments are sort of post-revenue. We're not very good in the early stage investment space. But one of the things that's often done with startup companies is founders might say, look, I put some of my stock in my super fund, I'll invest, it might only be $50,000 they invest in their company, but they do it through their super. Or, we have these public offers that are startup orientated, right? There's a section of legislation around small startups that are, what are they called? Crowdfunding, right? Crowdfunding legislation. Now, if you go and put some of your super into a crowdfunded deal, and that company ends up with $1 billion valuation, you might be years away from an IPO, years away from being able to actually get any cash, but there's your tax bill. So what this unrealised capital gain's done is basically said anyone in the venture capital space, anyone in the capital raising space, anyone in the crowdfunding space is going to say, you better not put any of your retirement savings anywhere near a startup, because if the price spikes, you could get a tax bill and no way out. And you think about the flow-on effect of that, and obviously we're not going to spend the whole time talking about this, but the flow-on effect of that is that thousands of people that could put money into venture capital, which actually creates opportunity in our country, won't. And this market already struggles as it is to try and commercialise new technologies or capitalise companies for transactions, and now it's just harder again. And I don't think there's any thought whatsoever to the impact of that. because it seems, just a few rich people. It's actually just going to have huge impacts in agriculture and venture capital.
Look, I go back to the point I made. I mean, I'd like to know who came up with this idea, where's the discussion paper, and where's the positives and negatives. I mean, it hasn't been put to the public, and it's just, I don't know what was said in Parliament and when it was debated and held up. But there's something very strange about the whole thing. The $3 million limit seems to be plucked out of nowhere. But I've had it said to me, because I thought, well, how's this going to apply to defined benefits, pensions which exist in the Commonwealth sector? And one tax expert said to me, it won't affect them because the tax we're proposing is levied on the beneficiary or the member of the superannuation fund. In defined benefits, it's a liability of the employer, right? And how do you tax a liability of the employer? It doesn't compute, so to speak. And I thought that's interesting. So we're coming up with a tax which hits self-funded retirees, which may not have any effect on defined benefit pensions, which are indexed for life and can be bequeathed to a partner. Now, if that's the case, then obviously there's a huge conflict in designing this policy to the benefit of public servants, designed by public servants, who probably have designed something which they won't be affected by if they are a beneficiary of defined benefit. Now, that's a pretty serious situation where tax policy is designed to benefit the designers and to be against population.
Yeah, I don't know that they've thought about this at all, to be honest. I think they've just looked at super and these rich people and how do we get them to pay a little bit more, and they're probably sitting in shares anyway, so they'll just sell some shares and it'll be fine. I don't know that there's been any real thought about the actual consequences.
Well, we don't know, because I know I'm cynical and I don't want to be, but when you get people, and there would be people inside Treasury who have worked there for over 25 years and probably a beneficiary of the old superannuation system, defined benefits, who are marking their time, waiting to retire, and have probably said, well, we better not bring in a policy which affects us. How about this one? I mean, that's what it looks like, and until someone can prove it's not the case, then that's a position I'm taking, because it's such an absurd tax when you think about it. Totally absurd. And if it doesn't apply to defined benefit schemes, then we have a problem in this country, because we have some extraordinary pensions being paid to ex-politicians and judges and public servants and defence personnel, which are hidden from the public, that they're not disclosed. And, from what I can gather, the last budget, the current budget is going to pay circa $15 billion in pensions under defined benefit schemes, whilst we have a future fund which sits there and doesn't pay any pensions, funded by the taxpayer.
Do you know, it's actually a funny thing to think about, because I think often when the future fund is brought up and talked about, it's thought about this idea of, a future savings pool for Australia, similar to the way Norway and a few other countries have got a sovereign wealth fund, right? But in actual fact, it's nothing more than a funding bucket for obligations the government has to public servants.
Yeah. Well, public servants from 20 years ago and defence personnel from 10 years ago.
And don't get me wrong, they should absolutely get paid, but it's quite funny actually when you think of it. We don't really have a sovereign wealth fund. We just have, we have a sovereign wealth fund, it's called the superannuation industry, which is spread out across 6,000 different funds and not really actively being invested in the Australian economy.
Well, it's even worse, Michael. The future fund doesn't pay tax. It doesn't pay tax, doesn't pay pensions. And it's hidden from the public. It's hidden, the size of it, its purpose for being, its investment strategy, it's lip service to the public.
It'd be really interesting to actually ask the general punter what they think the future fund is for.
They think it's their future. It's not. It's got nothing to do. And when I make the point that circa 15 billion is paid out in these defined benefits from the taxpayer. That's a massive amount of money. When we're talking about a $28 billion deficit this year, half the bloody deficit is pensions being paid out on a pre-2005 pension scheme.
Yeah.
Crazy money. So why isn't this being publicised? Anyway,
well, yeah,
it's another point.
Topic for another day, I reckon. So the other thing that you and I have talked a bit about energy before, and often the presentations we run, we talk a fair bit about the energy cost in Australia, and there was obviously an idea for a gas reserve, but where the Labor Party is certainly heading is massive investments in battery and other infrastructure grants and approving projects. Did you have a view on just sort of how that's likely to impact the cost of electricity in Australia moving forward?
Well, we had it this morning, amazing announcement this morning by the regulator, and wholesale prices in southern Australia, are up on average 15 to 20% of where they were a year ago. And Tasmania, of all places, which has gone very left in its vote, 75% increase in wholesale prices. And that's what happens when you have a drought and you're relying on hydro. So, these numbers are being hidden from the public. Everyone knows through their bills that they're getting charged more. We've got another 6 months, I guess, maybe of $75 a quarter rebates. But when they fall away, it's going to be totally embarrassing what the bills are going to be. And Australia probably is looking down a resurgence of inflation in 2026 driven by energy costs. Because we haven't got a policy, haven't got a strategy. I kept on saying during the election, what is the grand plan? It shouldn't be a debate. A policy regarding energy has become too political, where it should be in the national interest. What is in the national interest? And we get all this biased debate about, renewables, carbon-based, nuclear. I think the majority of people would say the solution is amongst all of it, on some basis, all of it coming together on a 20-year view to restructure Australia's energy. But when we're arguing about it every month, every unrelenting argument every month, and no, I don't think half the people know what they're talking about. I'm not an expert. Just common sense tells me that I think the latest count was 32 countries are rolling out nuclear, and most of them don't even have uranium. We have uranium, and we don't want to think about it. It doesn't add up,
Well, I think your key point there is it just became political, right? It became the colour you pick determines the energy solution we have. And that's definitely not the right way to think about it. The right way because I don't think either party has the resources to properly undertake the due diligence to make appropriate decisions. That is a department. That's a departmental bureaucratic process to work through how they actually solve energy pricing. And I think it's just become such a political kicking ball. I mean, the Greens were very focused on renewables are the only possible solution. But it's funny, I haven't really thought about it too much until recently. And I'm a boring fellow, so I just sort of started looking at why is it that increased renewables around the world increases prices? It's actually very simple, and you probably know this, but I'm just going to speak for those that tune in. When you introduce solar into a system, right, and you put it across every house, it's only going to generate power, really peak power, between sort of 10 and 2, right? But all use is sort of from 3 till 10 o'clock at night. So the idea is that's fine. We'll bring in batteries. We capture the power we used in the evening, right? But the thing that's probably hasn't been realised here is that once you start proper electrification of other elements of the economy, so take transportation. So transportation is actually the single largest polluter, whether it's commercial or residential transport, right? Vehicles, that's the biggest carbon emitter by single group, right? So you electrify the transport industry. Well, all of those vehicles are charging in the evening. They're charging, my car, the electric car, charges from midnight to 2 p.m. And when I've actually done the numbers on my own little mini grid, right, all of the power that I would generate during the day is used just by my car. And I've got probably one of the biggest systems you can get on a house, on a pretty big footprint, to charge one electric car, sucks every bit of power that I would have generated during the day. So if I had a battery, I'd get my battery, charge it during the day, use it in the evening. I'm still going to need to go to the grid, right? And the funny thing around the economics of this, and it makes sense when you think about it, if I'm going to install mass centralised power generation, gas, coal, nuclear, it doesn't matter what it is, I'm recovering that on the use of the market, the general grid, right? Now, if I have 4 hours in a day where I'm not going to get any sales of my power, I'm now going to have to make back my return on investment in 20 hours instead of 24, right? So what am I going to do? I'm going to charge more for the 20 hours that I can recover on because I can't get money out of those 4 hours. They're being, the energy is being generated by solar. Then I add a battery to it.
Yeah.
Now, for most households, I should be able to cover that evening peak area. Great. But that massive infrastructure investment I've had to make to bring in, either to renew or retain coal or hydroelectric or any of the other sort of centralised large-scale infrastructure investments, I now only have from, say, 10 p.m. to 6 a.m. the next morning, the lowest possible use period, to recover my investment. Well, the only way for me to do that is to increase the cost. And I have to increase the cost across the board. So the irony is that this renewable approach, just the way we've gone about it, and I'm not sitting here saying it was wrong, or but the actual consequence of it has been, if you're not wealthy enough to buy and install solar panels and batteries, you're subsidising the wealthy people who can, because your electricity price goes up. And then even if you have these systems on your house, the second you need to use the grid in the evening, you're going to pay 3, 4, 5 times more, because that infrastructure investor needs the return on investment. So it actually makes a heck of a lot of sense as to why this transition has massively increased electricity bills. It's because we can't get away from the fact that there are centralised infrastructure installations, even if they are themselves solar or wind, for example, right? You still have to make an investment, and then you have less and less time during the day to recover your investment, which means you just have to charge more per hour. And then you see this, you provide more supply here, I've got less time, I'm going to charge you more. And who misses out? It's the lower income earner that actually has been subsidising the grid that's been installed by wealthy people in nice houses.
Yeah. Well, look, I've always said, I'm a bit older than you, Michael, but, in the good old days, power was supplied by government. And, it's gone completely haywire as governments collapsed, mainly state governments, who were providing the infrastructure, generation, distribution, sold it off to private hands. And then all of a sudden it became, how much money can I make out of the grid? Rather than providing power at the reasonable cost, maybe break-even cost to the public, because the public owns the asset. So during the election, it was often said by the Prime Minister, no one will invest in nuclear, so it can't be viable. Well, if we only provide public service based on whether it makes money, then guess what will happen to society? And we've tried this in healthcare, and have a look what's going on there. Private hospitals now are struggling. There'll be a point in time in the future where private education will struggle, because the costs are going to be, if we're chasing a profit margin for services which are essential, then you're going to create chaos. And this is what lays ahead of us.
Do you know what's really funny, John? I just thought of as you're saying that. So we've put all this money into the NBN, right? So we now have public infrastructure, fibre network, because we need fast internet, right? That was the story. And I agree with that because I'm a big fan. But the funniest thing is we now have public infrastructure for internet and private infrastructure for power. And if I had to pick between the two, I don't mind paying a little bit for my internet, but I need power. And the irony is that it's actually the wealthy that can afford to jump off the grid and to provide their own supply. Yeah. And those that need, like we want a social floor, right? Like it's how we maintain a civil society, is that, there's an expectation you participate, you live here, there's benefits to that. Well, the social floor is getting harder because we're deciding that we need to make profit out of power, but we need free internet. Crazy.
Well, the internet's also, it's getting taken over by satellites anyway, isn't it?
It's funny, because I started my career in was in telecommunications, and I remember when they rolled out the NBN, I said, by the time you guys run it out, there'll be faster mobile network connections than you can possibly get. And it's been that case that every time we increase the fibre cost capability, there's a bit of a leapfrog in what we can get out of wireless. So it's been funny to see how that's grown over time.
But even there, is Telstra incentivised to provide an extensive wireless network? And as a public company, they're not. Because I'll go and look at areas, and I'm sitting here on a farm today, I get 1 bar 4G, which certain times of the day it doesn't work because everyone's turned on their 4G network around me. And it doesn't matter how many times we complain to Telstra, they never fix it, So I'm on Wi-Fi and I'm on satellite and I'm on with Elon Musk because it's better than the NBN. I mean, honestly, this sort of schmozzle, it makes Australia in some aspects look like a third world country. We don't grab our destiny. We don't play to our unfair advantages. Yeah, and our unfair advantages are, a highly educated society, good laws, very well located with Asia, abundant resources, abundant energy. And here we sit here, we have one of the most expensive energy markets in the world, and we have no manufacturing base. We don't really get on fantastically with our neighbours. We haven't got a free trade agreement with India. I mean, you just go, what is the game here? And it's interesting to think about it because America is going through a whole reset, as we know, subject for today. Australia really needs to go for a reset before it gets into a position where it has to have a reset. We've been very lucky, and we can control our destiny. And everything we're talking about is actually leadership and creating public policy, which everyone buys into. It's not a debate. We agree what the best course for the country is, and that's probably what was most disappointing about the election. If we get back to the election, is there was more arguments about what the differences were and very little understanding what they agreed on. It made it look like there's very little that Parliament can actually agree on and deliver. That's what it
Well, the thing that I found
yeah.
interesting or difficult to grapple with actually was the lack of infrastructure investment from either side. So if I look at just what is government good for and where can we spend our money, and we've talked about this before, that we have some of the lowest debt to GDP from a federal debt perspective compared to most of our comparable economies. So our debt's quite low, our household debt's quite high, but our government debt's quite low. Yet there's very little infrastructure expenditure in the budget that was proposed by all the election promises made by the Labor Party, and even on the Liberal Party side there wasn't really huge infrastructure. I think they were proposing $5 billion worth of enabling infrastructure to enable housing developments. That was one thing. But I think that was quite absent. And it's funny, when you look at what's actually been promised, it's been a whole stack of additional costs. So we've had tax cuts, right? We've had investments and expansion in healthcare. Well, that doesn't make any money. It's just we want that, but it doesn't have anything on the other side of the ledger. At least with infrastructure investments, we know that we're going to create an asset that's going to have an economic benefit long term, and often we can borrow to build those assets. But certainly no one's promising to run a fast rail from Sydney to Melbourne. None of those big infrastructure projects are being talked about. Yet in the time we've had 6 prime ministers now, China's gone from almost nothing to a nation-spanning fast rail network that gets you from Beijing to Guangzhou, I think, in 2.5 hours, 3 hours.
Yeah. Well, we are stalling. I think whilst we're growing, our GDP per capita is going backwards. That's the real issue, the real decline in wealth we've had since COVID. And I neither party proposed anything to rectify that trend line. So when we talk about the future after the election, we've got a bit of a pump prime going on, and given all the promises, a budget which is on one leg, it's not stable. No clear policy around, developing a national grid in 10 or 20 years' time. Superannuation is sitting in a state of flux. Aged care, we've got the NDIS sort of filling some gaps there, but we know there's rampant abuse of the NDIS, costing taxpayers a fortune. We've got an upgrade in defence, and I guess it feels good, but what's the purpose, Are we going to disengage with America? I don't know.
Well, it'd certainly be good for our agricultural exports, that they stop selling and we start selling.
Yeah, so, it was just, I think, who knows? I mean, we'll look back in time and see what this election really proved, or what was really discussed and what was resolved. But sitting in the middle of this muddle, it was like, well, back to work, same government comes back to work, they've got more power, they've got a mandate to get on with it. Now we're seeing instances where, there's a Labor government in New Zealand fell on top of itself with an increased majority. It doesn't always work. And sometimes you've got to have a strong opposition to hold the government to account. And what we've got is a period where we have a very weak opposition. And how's it going to work out in terms of public policy debate?
What do you think of this idea of providing a government guarantee to get rid of lenders' mortgage insurance for first home buyers. Have you seen that one?
Yeah. Well, to some extent it made sense, as did the Liberal Party tax deduction for low income earners on a mortgage. I mean, but let's be real. These are policies about getting people to buy into an overpriced market. It's not about affordability. What's your definition of affordability? I make it more affordable for you to pay 50% more for a house than you should. Is that the definition of affordability? Or is it, I've allowed you to enter a housing market where you can own your own house within 10 years, and then you can scale up as your family grows and as you mature, and then scale down into so you can take capital out of that market. We haven't got that at all. We've just pushing people into the market who it feels good, but they're going to have a 30-year debt load, and they're going to be liable to interest rate moves, up and down. We've had with the greatest respect, we've had a very mild interest rate increase since COVID, because COVID pushed interest rates down. If you look historically, current interest rates are not excessive, but there's so much mortgage debt, people can't afford to pay a 6% mortgage and live. What's our solution? Let's push more people into that market with more debt as a percentage of the acquisition price, and relieve them of their mortgage insurance, which is fine, but it doesn't solve the underlying problem. Bloody property in Australia is too expensive. And it's a terrible position to get into, because too much of our policy is directed about, bailing out the household sector,
It creates some really interesting challenges as well, because you buy an apartment, there's every chance that you'll see no capital growth in an apartment, because the assets depreciate faster than the tiny square metre of land you've bought appreciates. And you could see zero capital appreciation in an apartment for years, frankly. So then if there's a mild downturn or someone loses their job, I just wonder how often these guarantees are going to get called on by the government. It's only to first home buyers. It's not a huge, it's not like a Freddie Mac and Freddie May situation where the government changed the rules on the government lender and created later on the GFC. But it certainly feels that way to rock in as a guarantor and allow people to buy assets that, if it falls by 10%, do you as the young person just walk away from it and call the government guarantee in and go, well, let's move further out? Or and also what happens if they move to another house? So if I had an apartment and I have a capital loss on that and I go buy a house somewhere else, do I call on the guarantee? All of these systems are designed to be gamed, right? The funny thing with policy is you find a way to game it and get the most out of it. Yeah. So you buy an apartment close to the city, you hold it, you now want a house. Well, I can lose 15% on this house before I need to worry about paying for it. Great.
Yeah. Look, I think it goes to a lot of these. It goes right back to the beginning of this discussion where we said, did the Labor Party, the current government, actually expect to get the majority and win the way they did? Or were they pushing policies, not expecting to win and not expecting to fund it and not really considering the consequences? And I think what's going to happen is a whole range of these policies are implemented, because they have to be implemented. As we said, they won the parliament, they won the government, so there's an obligation to follow through. Then we'll start seeing, the ramifications of some of these policies which weren't thought through. And you've just opened up a hornet's nest, because the more I think about it, there are going to be consequences when people have to move or change jobs or change areas, and the unfairness to unit holders. A lot of European countries are more in units and townhouses, that they don't live like Australia does in broadacre. And probably the next 10 or 20 years, Australia's got to get away from broadacre development to more intensive living.
Well, they've just stuffed that up, because I can tell you now, just thinking about the commercial financing of these things, first of all, if I'm a bank, my concentration risk on an apartment building's just got a lot more conservative, right? That's the first thing. Yeah. And if I'm an investor or a developer in apartments, first home buyers have every chance of walking away and taking a discount on the property because they've got a lot less to lose. So if I'm buying an apartment, for the yield, for example, or for the tax deductions that come from depreciating the asset, well, I've got every risk of first home buyers abandoning the properties for 15%, 20% below their value and killing my capital value. So that's a additional risk for anyone looking to buy into apartments, is that first home buyers can dump your property price. And that also happens in regional areas where it takes very few sales to influence the price outcomes. We saw, anyone that's close around sort of regional property, the Darwin property market halved because of 1,400 people leaving the territory, right? Port Hedland's property prices halved, probably from way too high a price, but they halved. And there's some poor suckers gone, I'm going to get great income out of this regional property just to lose half of their savings.
Yeah. Yeah. Well, every time you change the rules, every time you bring in government assistance, they probably need to be worked on. And when you have these ideas coming out in an election campaign, as I said, where's the cost-benefit analysis? Where's the pros and cons? And it'll only come out when it's implemented or it goes into a Senate inquiry. That's the only time you get policy actually reviewed, and the public servants and the minister who's pushing it has to answer questions. The beauty of an election campaign, you can come up with these ideas, and no one can question it. And all the government can do, we fully costed it. I mean, how many times do we hear that nonsense? It's been fully costed. Well, it's being fully costed by taking the deficit into a greater percentage.
What's fully costed means on a spreadsheet. It's like every feasibility for property developments. I've never once seen a spreadsheet that says that the developer's going to lose money, but it does happen.
Yeah. Well, fully costed doesn't mean fully funded. That's the trick of words. So again, don't want to shoot down the press, but I think the politicians in got away with so much nonsense, and made these flyaway statements, and the press didn't seem to have the capacity to check them, and I don't know why that is, because, just as you and I talk, we can see problems in these policies which should have been picked up, on the bus when they were following around the Prime Minister and the Opposition Leader, and it's like, can you explain this? It doesn't make sense.
Well, I think we need to maybe bring back a current affair and just get some of these politicians to answer questions, because I don't know how this would be a John Hewson cake moment to try and explain, how unrealised capital gains work. You'd fall apart trying to explain that to a Jan Event. Correct. Or was it Ray? Ray Martin
and Willisey. Michael Willisey. He was the one who got. I mean, it's being able to ask pertinent questions and be able to listen to the answers of the politicians and counter with a sensible question, but. You even saw the debates between the two leaders. I mean, they were pathetic, terribly pathetic, And we're going down the American route of just slogans with no, policy background or no meat on the sandwich. I mean, there was so many wild comments made which had no basis in reality or truth. Anyway, we end up where we are, Michael. We've got a new government. I do think. Certainty has come through, so I think we covered that. But the Parliament is set. Government's got the mandate. There's no excuses. They can implement their policies. The opposition's weak. The deficit will be 1% plus. That stimulates the economy. What is uncertain is the trade situation internationally. Neither party really looked at that. I don't know what the Labor Party is going to do. Are they going to re-engage? I know the Prime Minister's off to go to Indonesia next week.
Which I feel like that's actually not a bad thing. Like, I've got to say, the way that we dealt with China off the back of COVID was pretty ham-fisted. Anyone that's done any business with Asia and Southeast Asia and China will know you do not call people out on an issue. If you have a question, your public face is, this is great, we're going to work together, there's challenges, and then behind the scenes you're going, what's happened, where's this, what's going on? And to go and smack them in the face off the back of this global pandemic and then be shocked when you get tariffed was just a blunder. So I will say, I think a Labor government's proven to be pretty effective negotiators, with our partners. Indonesia is such a massive opportunity and so close. It'll be interesting to see how we work with them. We have, and this will be a real challenge, I think, for the Labor Party, because they have this union movement, but there's no doubt there's a massive shortage of trade labour and a massive cost to that trade labour, which, there's an obvious solution sitting on our doorstep. There are qualified, competent, intelligent people sitting a couple of hours north of us that we could be working with to alleviate our costs and reduce inflation, which is not a new thing. Dubai was not built by people that live in the UAE. That will be a very interesting opportunity and challenge. It doesn't need to be permanent migration, but there are, skilled labour available to us that's not very far away.
Yeah. And just going back into trade, the big issue we don't know is where our biggest export price is going to end up. Iron ore is dropped below 100, but it's okay. It really depends on Chinese stimulation, although there is significant infrastructure and defence expenditure going into Europe, so there might be an offset. And Europe's a big economy, we can't dispute that. And then the resurgence of India, and obviously Indonesia coming down. So there's enough economic activity to support Australia's exports. The other issue is, where does energy prices end up with American administration wanting to flood the market or become self-sufficient, and Saudi Arabia apparently being supportive of that? That's something to watch. And then we've got the Aussie dollar issue, which looks like it's creeping up, Michael. I mean, the budget would be surprised if the Australian dollar got to 70 cents. That would be a significant issue. It'd be very good potentially for inflation, imported inflation, but would hit superannuation assets pretty hard, if they're internationally exposed. And we've got huge international exposure in capital markets around the world. So it's a bit of a state of flux. And I don't think that the election and the government have thought about it that much. They're just going to bounce off the walls as things unwind.
Yeah, I think there's obviously from the promises that have been made around, health and education, there's an expectation that the money's going to keep flowing, and that, everything will be okay, which, is more likely the case, I think, than not, really. I mean, I look at the electrification of Asia and the move towards, let's just say non-carbon energy solutions, whether they're renewables or nuclear or hydro or geothermal, is still going to drive the rebuilding of things. All of these cars to be replaced, all of this infrastructure to be upgraded, all of these things are going to need, the mineral resources that we have here. So I think, broadly speaking, the macro position for Australia is still the lucky country. It's just whether we're actually taking advantage of this luck or just continuing to sit back.
Yeah, look, we don't want to dwell on it, but I think the point is right. The future is pretty good for Australia, and the outlook for the world is reasonable. The environmental issues obviously sit in the background as an issue which has to be addressed and thought about. But there's a scan across the world today. There's a trade battle between America and China. If you listen to the tea leaves, it'll be resolved. It might take longer than expected, which is going to put pain on both America and China. Having said that, the American strategy appears to be about sustaining and stimulating growth. They've got a 3% deficit they're targeting, 3% deficit. So the American economy is not going to stop growing anytime soon. And that's the biggest economy in the world. China will do what it has to do to sustain growth. Europe's coming back on stream with the requirement for defence expansion. The emergence of Indonesia and India in the Asian region. So there's nothing really to get negative over in terms of world economic growth. The makeup of it and where Australia sits in it is the unknown. Whether we're a strong participant or we're just dragged along. And I guess where I got to during the election campaign, we don't seem to be in control of our destiny. We seem to be a drag along, which is, given our status in the world, is not good.
Yeah, it's a wasted opportunity, I think. One positive, they're looking at getting rid of the luxury car tax. So I know you...
What in my 2012?
Doesn't make much of a difference for you, but for car nuts like me, might finally be able to get some nice European iron for a reasonable price, and US. I love my cars, so if we can get rid of luxury car tax now we don't have a car industry, I'd love to see that happen.
Well, we're going to have an influx of EVs out of China as well coming in, so again, that's in a state of flux. The new car market dropped. It's been, I think, for 6 or 7 months in Australia, and I think that's more people waiting for price declines and get some certainty.
Well, that's probably one thing we
So
do
that-
have out of this
that looks
election,
good.
right? Is there is going to be some more certainty. Like it is. One of the
Yeah.
things I was sort of worried about coming into this was a minority. I hear people talk about this idea that lots of minor governments forcing a better democratic outcome by having to work together as being a good thing. But when you look at the practical outcome across Europe and the UK, it just results in indecision and chaos, and no
Yeah.
one being able to strike a deal. I mean, the reality of what we have in government now is, a mandate. I don't think they should be too comfortable with it because it clearly came from a lot of preferences, but they do have the seats. They can move what they want to move. We, from an investment perspective, can have a better guess as to what we expect governments to do with things, which does make it easier to plan and invest. That we know that there's going to be a stack of investment in health. Well, there's a lot of listed companies that will benefit from that. We know that some of the larger ones might actually get paid properly because in the past, radiology and others have been losing money on government work and hoping to make it up in private. That might change. So I think there's benefit in a little bit of certainty from a government perspective. It'll just be how effectively they execute and what unintended consequences come from those policies.
Yeah, I agree. But anyway, I think we've covered all the
I think
issues.
so. It's a good chat. Always good.
It's good, and let's see how it goes. I think next time we chat, let's chat about America and tariffs and what's going on there, because it's taken a bit of a back burner as all these negotiations apparently are taking place.
Hundreds
There's no
of
evidence.
negotiations.
There's no evidence of any breakthrough. And as I just said in a commentary, America is targeting to have a 3% fiscal deficit. And I don't know whether the world has woken up to that fact. America has no intention of balancing its budget, which is good for economic growth, I guess. The quality of that economic growth needs to be thought about. But we've got a massive debt load in the American government, which it has no intention of repaying. And at some point, the whole world's capital markets have got to wake up to that point that America is happy to create debt, but not happy to pay it back.
Well, what I'm going to be really interested to, when we chat again in a couple of weeks' time, it'll be whether or not shelves ran dry in the US in a big way. Because I know that when you look through the supply chain, there's a lot of, if you just look at where shipping is at the moment, there's a lot of ships that have not left China that ordinarily would have, and the LA ports are stalling, and that's a lot of goods, that's not being delivered, and that supply chain is getting broken. Because, it's probably useful to know, and we'll just see how it plays out, but it's a lot of small businesses making all of those imports, exports. It's not big monopolies. It's thousands of small companies making decisions to import or not. And when tariffs meant an immediate load on their expenditure, they just stopped shipping. So it'll be fascinating to see how that plays out when we catch up in a couple of weeks on it.
Yeah, can't wait.